Before you buy car insurance this year, stop for just a moment, because what I'm about to tell you could save you hundreds and in many cases thousands of dollars before you even sign your next policy. Most people in the United States pay far more than they should simply because they don't understand how the insurance system actually works. Today, I'm going to walk you through the hidden rules, the pricing tricks, the secret discounts, and the silent warnings that insurance companies never talk about. I'm going to break it all down in the simplest way possible so that by the time you finish this video, you'll be able to buy the right coverage, avoid the traps, and save real money every single year. So before you renew, before you buy, and before you click anything online, listen closely because this could genuinely save you a lot of money. Buying car insurance should be simple, but the truth is, it's designed to be confusing. Insurance companies use complicated language, long documents, hidden limitations, and clever marketing terms that sound protective but don't always mean what you think. People hear words like full coverage, liability, comprehensive, collision, deductibles, and premiums and assume they understand what they're getting. But in reality, most drivers are underinsured, overcharged, and completely unaware of what's hiding inside their policy. And the industry likes it that way because confusion keeps customers from comparing prices and finding better options. But when you understand how everything works, the entire game changes. So let's break down the biggest mistakes people make and, more importantly, how to avoid them. One of the most common mistakes is choosing the cheapest state minimum coverage. Every state in the U.S. has a required minimum amount of insurance that you must carry, and these minimums are usually extremely low. They look attractive at first because the monthly cost seems cheaper, but this is where the trap begins. For example, if your state requires just $25,000 in liability coverage and you cause an accident that results in $80,000 of damage, here's what happens. Your insurance pays the required $25,000 and you personally owe the remaining $55,000 out of your own pocket. That debt can follow you for years. Minimum coverage is only cheap until you actually need it. Spending a few extra dollars per month for better liability limits like $100, $300 can protect you from financial disaster. And many people are shocked to learn that raising your liability limits usually costs less than one fast food meal per month. Another thing that surprises people is how insurance companies actually decide your rate. Most of us assume it's based on your driving history, your age, your gender, and the type of car you drive. While these things matter, insurance companies also use hidden risk factors you never see. They analyze where you live, the exact zip code you're in, your credit score, your payment method, how often you shop for new insurance quotes, how many miles you drive, and even your online shopping behavior. Yes, insurance companies track when you check their prices, how long you stay on the website, whether you come back multiple times, and even the time of day you search. They know when people are desperate to buy quickly, and sometimes prices are higher during those moments. That's why shopping in private browsing mode and comparing at least 3 quotes is so important. A quote you get in the morning might be different from the quote you get at night. The system is constantly adjusting. Now, let's talk about the biggest misunderstanding in auto insurance, the phrase full coverage. People walk into agencies and say, "Give me full coverage." But the truth is, full coverage doesn't exist as an official insurance term. When an agent gives you full coverage, they are usually giving you liability, collision, and comprehensive. But this does not cover rental reimbursement, roadside assistance, gap insurance, custom parts, wage loss, medical payments, or towing. Many drivers think they're protected from everything, but when something goes wrong, they're shocked to learn that their full coverage didn't actually include the feature they needed. This is why you should always ask for a full list of coverages, not rely on the phrase full coverage. Make sure you understand exactly what you're paying for. Another major issue is choosing the wrong deductible. People often pick a $1,000 deductible because it lowers their monthly bill. But when an accident happens, they suddenly realize they don't have $1,000 saved to pay for the repairs. That means the car sits in the driveway, damaged while they try to figure out how to come up with the money. Always choose a deductible you can realistically afford today. For most people, that's around $250 to $500. Paying a slightly higher monthly cost is worth it if it saves you from a financial emergency later. Let's talk about discounts because this is an area where a lot of money is lost. Insurance companies offer more than 20 different discounts, but they rarely tell you unless you ask. These include good driver discounts, good student discounts, low mileage discounts, pay in full discounts, auto pay discounts, multi-car discounts, multi-policy bundling discounts, occupation-based discounts, senior savings, and safe driver tracking programs, and more. You could qualify for several of these right now and never know it. Some people save $300 to $700 per year simply by requesting a discount review. Your agent is required to check your ability, but they won't do it unless you specifically ask them to do it. Another surprising thing is how your insurance price can increase even if you haven't had an accident. Many drivers open their renewal notice and see the price has gone up by $50, $100, or even $200 with no explanation. Insurance companies adjust rates for many reasons: inflation, claim costs in your area, changes in accident statistics, rising repair prices, company losses, credit score changes, or even because they think you won't switch insurers. Yes, sometimes companies raise your rates simply because they assume you won't bother looking elsewhere. That's why you should shop around every 6 months. Staying loyal rarely saves you money in the insurance world. Moving to a different company often gives you lower rates, better discounts, and better coverage. Here's another mistake people make: skipping rental reimbursement coverage. It costs only a couple of dollars per month, but repairs can take 10 to 30 days. Rental cars cost $40 to $60 per day. Without rental coverage, you might spend over $1,000 while your car is in the shop. That's why adding rental reimbursement is one of the smartest decisions you can make. It's cheap and extremely valuable when something goes wrong. Now let's cover something most people never think about: reading the policy declarations page. This is the first page of your insurance paperwork, and it lists everything you're paying for. It shows your limits, your deductibles, your discounts, and your optional coverages. Reviewing this page for just 2 minutes can save you tons of money because it helps you spot useless coverages you don't need and missing coverages you should have. Think of it like the receipt for your insurance. Always know what you're buying. Another secret is that not all insurance companies are equal. Some companies are cheaper but take longer to process claims. Some companies offer great customer service but have slightly higher rates. Some companies are known for fast repairs, free glass coverage, or better rental car benefits. And some companies are just not worth the trouble at all. That's why reading reviews and asking friends or family about their experiences matters. The cheapest price is not always the best deal. You want a company that will actually help you when something goes wrong. Finally, remember this: car insurance becomes expensive only when you don't understand it. The more you know, the more you save. So before you buy your next policy, avoid minimum coverage traps, understand what full coverage really means, choose the right deductible, claim every discount you qualify for, shop around every 6 months, and always check your declarations page. When you do these things, you protect your money, your car, and your peace of mind. Thank you for watching, and seriously, never buy car insurance without watching this first.